Most people think a successful trader is someone who makes a lot of money, someone with big wins, impressive returns, a growing account. And while profitability obviously matters, that's not what defines long-term success in this game. The traders who last, the ones who build sustainable careers that span years or decades, aren't defined by their best months. They're defined by something much quieter and much harder to achieve: emotional resilience. Emotional resilience is the ability to experience loss without falling apart, to experience drawdowns without panicking, to have mediocre weeks without questioning everything, to stay steady regardless of what the market does to you in the short term. And this quality, this steadiness, is rarer and more valuable than any strategy you'll ever learn, because strategies come and go. Market conditions change, but emotional resilience is what allows you to keep showing up, keep executing, keep trading through all of it. If you're feeling emotionally exhausted by trading, if you're burned out from the constant ups and downs, this video is for you. Because what I'm going to talk about isn't how to make more money. It's how to build the internal foundation that makes long-term trading sustainable, not exciting. Sustainable. Let me start by telling you what emotional resilience is not. It's not motivation. It's not excitement. It's not the feeling you get when you have a great trading day and you think you've finally figured everything out. That's not resilience. That's euphoria. And euphoria is temporary. Emotional resilience is what remains when the euphoria fades. It's what keeps you going during the boring stretches. It's what holds you together during drawdowns. It's what allows you to take the next trade after 3 consecutive losses without your hand shaking. Most traders confuse resilience with toughness. They think it means you don't feel anything, that you become cold, robotic, unaffected. But that's not it either. Resilience isn't the absence of emotion. It's the ability to feel the emotion fully, acknowledge it, and not let it dictate your behavior. You still feel disappointment after a loss. You still feel frustration during a losing streak. You still feel doubt when nothing seems to be working. But those feelings don't control you. They don't send you into a spiral. They don't make you abandon your plan. They're just feelings. They pass, and you continue executing. This is what separates traders who build long careers from traders who burn out in 2 years. Not intelligence, not better strategies. Emotional resilience, the capacity to experience the full emotional range of trading without being destroyed by it. Now let's talk about why this is so hard to develop. Trading, more than almost any other pursuit, ties your emotional state to randomness. You can do everything right and lose. You can make a perfect decision and the market moves against you anyway. And your brain struggles with this because it wants to believe that effort equals results, that good decisions lead to good outcomes. But trading doesn't work that way. Trading works on probabilities. Any single trade, even a perfect one, has a chance of losing. Any single week, even executing flawlessly, might end red. And this creates psychological chaos for most people. Because when you lose, your brain wants an explanation. It wants to know what you did wrong so you can fix it. But sometimes the answer is nothing. You did nothing wrong. The trade just didn't work. That's probability. And if you can't accept that, if you need every loss to be explained by some error you made, you're going to drive yourself insane trying to optimize away randomness. This is where most traders break down emotionally. They can't tolerate the uncertainty. They can't accept that they don't have control over outcomes, only over decisions. So they either become paralyzed, afraid to trade because they might lose, or they become chaotic, constantly changing things, trying to find the setup that never loses. Emotional resilience is built on accepting this fundamental truth. You don't control outcomes. You only control your process. And once you truly accept that, once you internalize it, so much of the emotional turbulence disappears. Let me talk about something that destroys traders emotionally: tying their self-worth to their trading results. This is so common and so toxic that it deserves its own discussion. When you start trading, especially if you're intelligent and accomplished in other areas of life, you bring a certain identity with you. You think of yourself as competent, as someone who figures things out, as someone who succeeds when you apply yourself, and trading becomes a test of that identity. A winning trade confirms it. You feel smart, capable, on the right track. A losing trade threatens it. You feel incompetent, like maybe you don't have what it takes. And when your sense of self is tied to each trade's outcome, you're on an emotional roller coaster that never stops. This is exhausting, because you're not just managing the practical aspects of trading. You're managing your entire sense of self-worth based on whether the market moved in your favor or against you. And the market doesn't care about your self-worth. It's going to move however it moves. The shift that has to happen is this. You have to separate who you are from what the market does. A losing trade doesn't mean you're a bad trader. It means that particular trade didn't work. A winning trade doesn't mean you're a genius. It means that particular trade worked. Neither one defines you. This is incredibly hard for most people because we're conditioned to derive our sense of worth from our achievements, from our results. And trading constantly gives you results, dozens of them every week. And if you're using those results to validate or invalidate yourself, you're going to be emotionally destroyed. The traders who develop real resilience are the ones who've learned to measure themselves differently. They measure themselves on process, not outcomes. Did I follow my plan? Did I execute with discipline? Did I manage my risk appropriately? Those are the questions that matter, and the answer to those questions is completely within your control. If you can shift your self-assessment from "Did I make money today?" to "Did I execute my process today?" everything changes. You can have a losing day and still feel good about your trading because you did what you were supposed to do. You can have a winning day and recognize that you got lucky on a mediocre trade. You're no longer at the mercy of randomness for your emotional stability. If you're building a trading career focused on longevity, not quick wins, comment below. Because that mindset shift is what this channel is built around. Now let's talk about losses, because how you relate to losses determines whether you'll survive trading long-term or not. Most traders treat losses as failures, as mistakes, as proof that something is wrong. And this creates enormous emotional weight around every losing trade. Each loss feels like a setback, a step backward, evidence that you're not progressing. But this is the wrong frame entirely. Losses aren't failures. They're business expenses. They're the cost of doing business in an uncertain environment. Every business has costs. Retail stores have overhead. Service businesses have labor costs. Trading has losses. It's just part of the model. When you run a restaurant and you pay for ingredients, you don't feel like a failure. You don't question your entire business model because you had to pay for food. It's just an expected cost. Trading should be the same. When you take a properly managed loss, you're just paying the cost of testing an idea in an uncertain market. That's it. It's not personal. It's not meaningful. It's just business. But to actually feel this way, to genuinely experience losses as neutral business costs instead of emotional events, requires a fundamental shift in how you think about trading. You have to stop thinking in individual trades and start thinking in probabilities. You have to zoom out. One trade means nothing. 10 trades mean very little. 100 trades start to show you something. This is how you have to think. Any single loss is just noise. It's one data point in a distribution. It doesn't tell you anything about your edge. It doesn't tell you anything about your ability. It's just one outcome in an infinite series of possible outcomes. When you think this way, when you truly internalize probability-based thinking, losses lose their emotional charge. You can take a loss and feel nothing. Not because you don't care about money, but because you understand that this loss is expected, normal, just one part of a larger process that works over time. This is emotional resilience. Not being unbothered by losses because you're tough or detached, but being unbothered because you understand the mathematics of what you're doing and you know that this single outcome doesn't matter. Let me talk about something that prevents traders from building resilience: the addiction to excitement. Trading can be incredibly stimulating. The wins feel amazing. The losses feel terrible. There's constant action, constant feedback, constant emotional intensity, and for a lot of people that intensity becomes addictive. They need trading to feel exciting. They need the dopamine hit from wins. They need the adrenaline from risk. And when trading becomes boring, when they're executing their plan but nothing dramatic is happening, they start forcing action. They start taking marginal trades just to feel something. This is a massive problem because sustainable trading is boring. It's the same setups over and over. It's waiting for hours or days for your criteria to be met. It's executing a process you've done 1,000 times. There's no novelty, there's no thrill, it's just work. And if you need trading to be exciting, you're going to sabotage yourself constantly. You're going to overtrade. You're going to take unnecessary risks. You're going to make impulsive decisions, all in pursuit of that emotional high. Emotional resilience requires you to let go of the need for excitement, to accept that trading, done well, feels closer to accounting than to gambling. It's methodical, it's routine, it's steady. And if you can't find satisfaction in steady, you're not going to make it long term. This doesn't mean trading should feel miserable. It means you have to find a different source of satisfaction. Not the thrill of individual wins, but the quiet confidence that comes from executing your process. Not the excitement of big moves, but the stability of knowing you're doing what you're supposed to do. The traders who last decades aren't the ones chasing adrenaline. They're the ones who've made peace with boredom, who can sit through weeks of mediocre performance without needing to do something dramatic, who find their emotional reward in consistency, not excitement. Subscribe to this channel if you're building for longevity. We focus on the psychological foundation that makes trading sustainable, not the short-term tactics that burn people out. Now I want to talk about identity. Because one of the most powerful shifts you can make for emotional resilience is changing how you see yourself in relation to trading. Most traders, especially in the beginning, identify as gamblers whether they admit it or not. They're betting on outcomes. They're hoping their predictions are right. They're emotionally invested in being correct. And this identity creates massive emotional volatility because being wrong feels like a personal failure. But there's a different identity available. The identity of an operator, someone who runs a process, someone who manages probabilities, someone whose job isn't to be right, but to execute a system that has an edge over time. An operator doesn't care about being right on any individual trade. They care about whether the system is functioning correctly. They don't take losses personally. Losses are just part of the statistical distribution. They don't celebrate wins as validation. Wins are just the other side of the same distribution. This identity shift changes everything. Because when you're an operator, your emotional state isn't tied to market outcomes. It's tied to process execution. And you have complete control over process execution. So your emotional stability becomes internally driven, not externally dependent. Think about someone who operates a machine in a factory. They don't take it personally when the machine produces a defective unit occasionally. That's just variance in manufacturing. Their job is to run the machine correctly and maintain quality control over time. They measure success not by individual units, but by the aggregate production over weeks and months. Trading is the same. You're operating a process. You're managing a system. Some trades win, some lose. That's expected. Your job is to execute the process correctly and let the edge reveal itself over a large sample. When you see yourself this way, when you adopt this operator identity, so much emotional turbulence disappears. You're no longer trying to prove you're smart. You're not defending your ego. You're not seeking validation from the market. You're just running your process, and that creates a level of emotional stability that's impossible to achieve when you're still thinking of yourself as someone trying to win. Let me talk about what emotional resilience actually looks like in practice, because it's not what most people imagine. It's not never feeling doubt, it's feeling doubt and trading. Anyway, because your system says to trade, it's not never feeling frustrated during a losing streak. It's feeling frustrated and continuing to execute because you know the streak is normal variance. It's not never questioning your approach. It's questioning, reviewing your data, confirming your edge still exists, and moving forward. Resilience is continuing in the presence of discomfort. It's not eliminating discomfort. It's developing the capacity to function effectively while experiencing it. I know traders who've been doing this for 15, 20 years. They still feel nervous before big trades. They still feel disappointment after losses. They still have moments of doubt. But those feelings don't stop them. The feelings exist in the background while they execute their process in the foreground. This is the goal, not to become emotionless, but to develop enough psychological space that emotions can exist without controlling behavior, to build enough trust in your process that feelings of doubt don't make you abandon it, to have enough perspective that a bad week doesn't feel like a catastrophe. And this is built slowly, through repetition, through experiencing drawdowns and surviving them, through taking losses and continuing, through proving to yourself over and over that you can handle what trading throws at you. You can't rush this. You can't manufacture resilience through motivation or positive thinking. It's earned through lived experience, through showing up day after day, through good periods and bad, and learning that you're capable of handling both. Here's something else that matters for long-term resilience: having a life outside of trading. This sounds simple, but it's critical. If trading is your entire identity, if it's the only thing that gives your life meaning, you're going to put unbearable pressure on it. Every loss becomes existential. Every drawdown becomes a crisis. You can't afford bad weeks because trading is all you have. But if you have other sources of meaning, other relationships, other interests, other goals, trading becomes just one part of your life. It's important, but it's not everything. And that creates breathing room. That creates perspective. A bad trading week is just a bad trading week. It doesn't mean your life is falling apart. It doesn't mean you're a failure. It's just one aspect of your life that's not going well right now, while other aspects continue normally. This psychological diversification is essential for resilience, because it prevents you from making desperate decisions. When trading isn't everything, you don't need it to work right now. You can afford to be patient. You can afford to step back when needed. You can afford to prioritize long-term sustainability over short-term results. The traders who burn out are often the ones who've made trading their entire world. They have no other identity, no other pursuits, no other sources of self-worth. And when trading gets hard, which it inevitably does, they have nowhere to stand psychologically. Everything is collapsing at once. Don't let that be you. Build a rich life that includes trading, but isn't defined by it. Have relationships that matter, have hobbies that engage you, have goals that extend beyond your account balance. This isn't a distraction from trading success, it's the foundation of trading longevity. Let me tell you what changed for me. I spent the first few years of trading on an emotional roller coaster. Great days felt incredible. Bad days felt devastating. I was constantly swinging between confidence and despair, and it was exhausting. Then I realized something. I was treating every day like it mattered independently, like each day's results were a verdict on my trading ability, and that created massive emotional pressure. So I changed my time frame. I stopped evaluating daily, I started evaluating monthly. I stopped asking, did I make money today? And started asking, did I execute my process this month? And that one shift created enormous emotional relief, because over a month, variance smooths out. Over a month, a few bad days don't matter. Over a month, I could see my edge more clearly, and by extending my evaluation time frame, I removed the emotional intensity from daily results. I also stopped celebrating wins and mourning losses. I started treating both with the same neutral acknowledgement. Shua, that trade won. Noted. That trade lost. Noted. No emotional attachment either way, because neither outcome told me anything meaningful about my skill or my future. This wasn't easy. It felt unnatural at first, but over time it became my baseline. And when it did, when I achieved that emotional neutrality, trading became so much easier. Not easier to profit from, but easier to sustain. Easier to show up for. Easier to continue doing year after year. That's resilience. Not excitement. Not motivation. Just steady, sustainable execution, regardless of short-term outcomes. So how do you build this? How do you develop emotional resilience? First, you extend your time horizon. Stop evaluating yourself daily or weekly. Look at monthly performance. Look at quarterly trends. Give your edge time to reveal itself. This removes so much unnecessary emotional volatility. Second, you separate process from outcome. Measure yourself on what you control, your execution. Did you follow your plan? Did you manage risk appropriately? Did you make the decisions you were supposed to make? If yes, it was a good day regardless of profit or loss. Third, you develop perspective through repetition. You have to experience drawdowns and survive them. You have to take losses and continue. You have to prove to yourself repeatedly that you can handle what trading demands. There's no shortcut here. Resilience is earned through experience. Fourth, you build a life outside trading. Invest in relationships, pursue interests, Create meaning beyond your charts. This isn't optional, it's essential for psychological sustainability. And fifth, you accept that this is a long-term game. You're not trying to get rich this year. You're trying to build a career that lasts decades. And that requires thinking differently than 99% of traders who are looking for quick results. The truth is that emotional resilience is your actual edge. Strategies are everywhere. Information is free. Everyone has access to the same tools, the same markets, the same opportunities. The differentiator isn't knowledge, it's psychological capacity. Can you take a loss without spiraling? Can you sit through boring periods without forcing action? Can you execute the same process for years without needing novelty? Can you separate your self-worth from your results? Can you think in probabilities instead of outcomes? These are the questions that determine long-term success. And they're all psychological. They're all about emotional resilience. Most traders never develop this. They stay caught in the cycle of emotional highs and lows, reactive decisions and recovery attempts. They burn out. They quit. They blame the market or their strategy or their luck. But the real issue was always internal. They never built the foundation that makes trading sustainable. You can be different. You can build for longevity. But it requires accepting that the work is internal, not external. It requires shifting from seeking excitement to valuing stability. It requires measuring success not by profit, but by consistency of execution. This isn't glamorous. It won't make for exciting social media posts, but it's what actually works over time. Emotional resilience, the capacity to continue regardless of circumstances, the stability to execute your process through all market conditions and emotional states. That's the edge that matters, and it's available to anyone willing to do the work. This is Trader's Mental Edge, where trading starts in the mind.